So can you very briefly show us how you are combining the TanukiTrade levels with your footprint charts?
What I'm looking at,
What does market structure mean in practice?
the way that I think about market structure may be slightly,
How do you start your trading day?
and so my morning will typically start with,
When do you treat a call wall a rejection versus a continuation?
well, first of all, when we actually reach these levels,
Hi everyone, my name is Gary Knight and I'm the Chief Options Expert at TanukiTrade. Today I'm joined by Christopher Creamer. Chris is a futures trader who uses TanukiTrade in his own intraday trading process, and he recently recorded several trade case studies showing how he uses the market structure and GEX context in real market sessions. Chris, thanks for joining me.
thanks for having me, Jerry. Yeah, so my name is Chris. I'm a futures trader. I trade intraday, so I'm not swinging, I'm day trading. And I mainly trade the indices, so NASDAQ specifically. And sometimes I'm trading metals as well, or commodities such as gold. But typically I've been trading NASDAQ, and in the recaps later, what you may see is me trading NASDAQ futures. I've been trading for futures specifically for almost 4 years now every day. I do trade on my own live capital as well as trading with prop firms through sim funded accounts. And before futures trading, I traded in crypto and I did a little bit of Forex, but I kind of fallen into just specifically focusing on futures trading as of now or more recently.
Thanks for the introduction. And before we get into the conversation, I want to just frame the video that what we will talk about. When someone first opens the TanukiTrade, the biggest question is usually, okay, what am I supposed to do with these levels? But in my view, the goal is not to turn the levels into blind buy or sell signals. The real goal is to understand the market structure, where the price may compress, where it may expand, where the key decision zones are, and how futures trader can build scenarios around those areas. That is exactly what we will talk about today. And before we start, Chris is also a TanukiTrade ambassador, so I want to be transparent about that from the beginning. This conversation is educational only. Nothing in this video is financial advice or a recommendation to trade futures or any other financial instrument. After this conversation, you will see 4 historical case studies from Chris, where he walks through real futures trading sessions and shows how he used TanukiTrade levels in practice. So in this interview, I want to focus less on the exact trades and more on the thinking process behind them, how you prepare, how you read the levels, how you build scenarios, and how you manage risk. So in the opening, I said that the goal is not to turn the levels into blind buy or sell signals, but to understand the market structure. From your perspective as a futures trader, what does market structure mean in practice?
In terms of market structure, the way that I think about market structure may be slightly different than maybe an options trader. When I'm thinking of market structure, I'm thinking really just in terms of very basic structure, in terms of highs and lows and whether we're bearish, bullish, or consolidating or compressing sideways. When it comes to gamma levels and GEX, I think of it more in terms of regime or environment that we may be participating in, especially when it comes to futures, because futures is one of the underlyings and the options market is so massive. It's important to, kind of understand what's happening in the options market and how it may influence potential behavior in the futures market as well.
Okay, and when you open the TanukiTrade before the session, what's your actual workflow? How do you start your trading day?
Yeah, so my entire strategy in the way that I trade or my framework is not necessarily based all around gamma levels or GEX. It's one part of a broader framework. And one thing to note is I am an order flow trader. So I do trade order flow where I use things like footprint charts, or I'm looking at level 2 or resting limit orders and things like that. And so my morning will typically start with I'm looking at what I understand as market structure or how I view market structure, just in terms of what are we currently doing in the broader picture. Are we, pumping like we've seen in the past 2 months? Are we potentially shifting bearish, which is what we're watching us do right now, at least for the way that I trade, because I am intraday. So I typically only trade, the first hour or an hour and a half of market open. So I do look at lower time frames because I am intraday trading and I'm day trading. And I just need to understand, what are we doing? Are we consolidating? Are we moving down? Are we rebalancing a previous move? Are we trending up? Are we in price discovery? I need some context. After I do that, I do take a look at the Tanuki platform, and I want to get an understanding of what type of environment are we currently in. I look at the distribution of gamma and GEX. I see whether we are in a positive gamma territory or environment, or a negative gamma territory or environment. And I'm understanding where current prices may be pre-market, where it is in relation to some significant levels that I typically watch for when it comes to what I actually look at with this platform and with gamma and GEX in general. And those are things such as, the open interest, or the put wall, the HVL or gamma flip level, and the call wall. And I want to get an understanding on, when the market opens at New York Open for the indices, where are we in relation to this map? And it helps me plan out my day in terms of path and potential location references, where I start to pay attention to the auction in terms of buying and selling activity on my order flow platforms, to hopefully help me make decisions in my intraday trading. So it comes very early on in my morning routine in terms of understanding, what type of environment am I potentially going to be participating in this morning? And it helps me kind of form my daily outlook for the day, or the different scenarios that I'm structuring to be prepared for, when the market actually opens and prices moving a million miles an hour.
Awesome, thank you. And you are referencing the positive and negative gamma regime. You also make a difference between if we are in positive and negative gamma. Can you explain briefly the practical difference between the two in your futures trading?
Yeah. So when it comes to gamma environments, they create baseline expectations for myself, and there are certain nuances that may change certain things, but the most basic way that you can understand it is, when we are in positive gamma environments, we may see dealer behavior that can cause volatility dampening, meaning there may be more rotational behavior, or compression, or slower potential grinds or movement, where we may have more mean reversion behavior. And then in a negative gamma environment, it amplifies volatility a lot of the times. And it's not necessarily in terms of, on either side of these things, it's not necessarily in terms of direction. It's really just in terms of volatility in what I may see when it comes to follow through or speed. So for example, if we're in a negative gamma environment, we may see more expansion or more follow through, not necessarily in a certain direction, but just in general. And it is important to note that just because, we're in a positive gamma environment, doesn't mean that we necessarily have to chop or compress or balance out. And just because we're in a negative gamma environment doesn't mean that we have to just only expand. But it does create baseline expectations of how I might approach the morning, when I understand kind of where we're at in relation to current price. And it is important to note, where we're at in terms of the significant levels that I'm actually looking at, because the way that I may treat a positive gamma environment may be slightly different if we end up accepting past the call wall, and vice versa for a negative gamma environment. So it's just baseline expectations in terms of volatility for me.
And if we are looking at your shared screen, we are seeing the NQ on the 5-minute time frame, and we are over the first couple of hours of trading. And if you are looking at the chart right now, how would you analyze that from a futures perspective? If you were to open a trade, what would you look at?
Well, so first things first is, we are deep in negative gamma territory. We had a massive sell-off today. This is typically around the time where I would not trade. And also, if we are making a move like this, I treat it as kind of a later stage imbalance, meaning that after one of these types of moves, there may potentially be the chance of us finding value or temporarily balancing out. Now, in terms of what I would be looking at, though, is we are in a negative gamma environment. Now, I'm looking at the 0 DTE, and I do pay attention to 0 DTE dealer positioning and gamma levels specifically because I am an intraday trader. But that doesn't mean that I don't pay attention to the monthly expirations, as the monthly expirations are actually incredibly important, especially as we head into, the third week of the month, once we get closer to those expirations. But I'm typically watching the 0 DTE. Now, I usually do this pre-market. So typically pre-market, I would understand where we're at. Now, in terms of right now, we're in negative gamma environment. We're below the put wall. I would be expecting us in either direction. I mean, obviously we've been selling off, but I would be expecting us to have pretty high volatility right now. And we are. If you can see, these 5-minute candles are, I mean, this one was 200 points. And if you trade futures or you trade the NASDAQ, you would know that 200 points for a 5-minute candle is pretty insane. That's a very large ATR. There's a lot of volatility there. And it's kind of to be expected while we're in this environment. And the way that I might use that information, right, is, for example, if I know that the ATR is very large or that we're in this environment that has the potential for us to have a lot of volatility and potential follow through in certain swings or moves, I may need to size down because we are having a lot of volatility and we're in the environment where it actually makes sense to do that. So in terms of right now, there's not necessarily a trade idea that I can tell you, but that's just how I'd be understanding where we're currently at. Now, I do understand we are below put wall. We're deep in negative gamma territory, and we are currently in a scenario for today where we've dropped significantly. And honestly, at this point, I probably wouldn't be trading.
Okay, fair enough. And which environment do you prefer, the positive gamma or negative gamma?
Well, as an intraday trader who doesn't necessarily care about direction, but more about volatility, then I'm, going to lean my bias a little bit towards negative gamma days. I mean, they're fun to trade if we have volatility and we have that movement, because trading futures, it doesn't matter if the market goes down or up. I just need to be right in terms of direction. But what do we really need to be able to take some pretty decent trades is we need volatility. Speed is nice, and participation, of course. So I do prefer negative gamma days. That doesn't mean that, I don't trade whenever we're in positive gamma, but if you were to give me, the option of whether I can trade in a negative gamma environment or a positive gamma environment, I will typically have better sessions in negative gamma environments just because, I have a tendency to sometimes let trades run in negative gamma environments, and they can result in some decent wins and decent trades. And they're just fun times to trade for me personally. It's more preferred.
And if a market is reaching, for example, a core wall, when do you treat a core wall a rejection versus a continuation, and vice versa for put walls?
Yeah, so when it comes to actually looking at the put wall and the call wall, well, first of all, when we actually reach these levels, I do have an understanding beforehand on what my bias is for the day. So if I believe that, today may play out in a bearish scenario or a bullish scenario, then that is going to influence how I may treat a call wall or a put wall. Now, call walls and put walls for me are not magic lines. They are not areas where I just blindly fade call resistance or put support. They are references of location for me. And what's more important is whenever we approach these areas, I'm approaching these under the mindset of watching for acceptance versus rejection. Now, where that actually comes down to is when I'm looking at my footprint charts, I'm looking at the actual interaction between buyers and sellers at these levels, and I'm looking for acceptance or rejection at these levels. Now, let's say we're bullish and we are coming into a call wall, but the broader market is showing that we're very much bullish. Lower time frames, higher time frames are saying we're bullish. I'm much less likely to, just take a rejection off of the call wall because the market's going up. So we may easily see acceptance above the call wall. And if we do, then it can open up the door to further expansion to the upside. And the same goes for a put wall. Let's say that we are in a bearish scenario and we are approaching the put wall. Well, I'm not going to blindly fade a level below, or I would be looking more for potential acceptance past the put wall where we can then continue further downside expansion. So when we approach these levels, I'm really just paying attention to acceptance versus rejection. And I do take note about the other options metrics that we have in this platform, such as put volume or absolute GEX or call open interest, net call open interest, and whether or not these levels are actually sitting at the put wall or the call wall. And I do pay attention to open interest and volume as well. But there are areas of decision zones for me where I understand that we're there. I need confirmation in terms of potential direction when it comes to watching how the auction's actually playing out at these areas.
And if you see confluencing levels, for example, lining up with higher net volume and net open interest on the same, for C1, do you think it's more valuable in terms of the futures trading decision point?
It is. I do take note. So when we have stacked levels, and what I consider a stacked level is when we have the other metrics sitting here at the same level, whether it's, open interest or volume or whatever it may be, I do put weight on that. So if I notice that, let's say
it's more significant for you.
It is more significant for me. Now, it doesn't necessarily tell me or I don't treat it in terms of telling me direction or what is going to happen when we get here, but it just tells me that it is a more significant level that I should realistically be paying attention to, or maybe, I guess sit up in my chair and start watching the tape once we actually get to this area to determine, what is going to be the outcome of what's happening here at this level.
We always say that these levels are not predictions and not signals, but the more confluence you have at level, the more significant it can be. And you always have to watch for the momentum. And then you can confirm if the market rejects that level or makes a continuation off of it.
Right. And, when it comes to futures trading, and especially trading NQ, which is a pretty volatile asset just in itself in terms of futures, I do not treat these as just singular lines. They're kind of more like zones, the way that I take a look at them. I treat them more so as zones. So just because we may see a little bit of overshoot or extension past an area doesn't necessarily tell me anything, because I'm treating them more as a zone rather than a single hard line in the sand that causes me to make decisions. It requires a little bit more context, just in terms of rather than just using it as a singular line.
Let's talk a little bit about the HVL line. What impact does it have on your futures trading?
So the HVL, I do pay attention to it. Now, I do use it with some context, and I do understand that I don't necessarily treat it as a flip of the switch in terms of potential behavior. And, the way that we actually have it marked out here in Tanuki's platform is in terms of a transitional zone. Now, in the event that the HVL is sitting in location in terms of the rest of my framework, that matters, and the HVL is also sitting there as well, I do pay attention to, again, how the tape or the auction is actually resolving in this area. So I pay attention to the HVL when we do approach it, or let's say, depending on where the HVL is in relation to maybe the call wall or the put wall, it could be areas that I look for us to rotate back towards if we start seeing rejection and it's not such a large area between call wall, HVL, and put wall, because there are days where there's a lot of space and they are very far apart from each other. And there's other days where they're actually pretty close to each other. And so those types of days, I do pay attention to what happens in terms of buying and selling activity potential information or things that I can take to potentially take trades once we approach the HVL. I don't use it as, I use it very similar to the call wall and put wall. I think about it in terms of acceptance in this transitional area or rejection in this transitional area, rather than just looking for bounces off of this level. But once we do kind of accept past the HVL, then I do understand that we may be entering into a different type of gamma environment, which may cause different types of behaviors in the market. And that will influence potentially how I may manage a trade, manage stop losses, manage targets, or manage the position while it's actually open. So I pay attention to it. And if it does align with the rest of my framework in terms of location, I do put a little bit more weight on top of it, especially if it's a stacked level as well. Because sometimes we do have the HVL with a lot of stacked confluences there. And if that's the case, then same thing, I will put a little bit more weight on it or more significance in terms of paying attention to my confirmation tools, such as order flow, once we actually get to that area.
And are you also paying attention to the newly published expected move box? I can see you already enabled it on your chart.
Yeah, so I've been paying attention to it. Haven't really been using it yet, and I haven't had time to read or watch the piece that you made on it. I find it very interesting, so I am going to take some time and wrap my head around it a little bit more. But as of right now, it's on the chart, but I'm not really using it as much.
And which settings are you using right now? The pre-market or the open calculation for expected move? If you click on the chart with the right click and then open, click on static expected move box, the pre-market. Yeah, I would use that.
Okay, gotcha. Instead of this one?
Yeah, I would use the pre-market calculation for the expected move box.
Okay, awesome. I'm gonna be paying attention to this because I find it very interesting in terms of expected move based off of options data and how you guys are presenting it here. So I haven't had a chance to actually try and use it or implement it in the way that I'm using the platform. But I think it's really cool. So I'm going to pay attention to it a little bit more.
Yeah, I agree. I think it's very useful for futures intraday traders as well.
Yeah,
because
absolutely.
it shows you the probability edges or range during the trading day. How long are you typically in a trade, and how many trades are you opening during the day?
It ranges. Typically, I'm really only doing maybe 1 to 2 trades a day. If there's a lot of participation, a lot of volume, and a lot of opportunity, then of course I will, sit there and continue to trade. Typically, I'm only trading the first hour or hour and a half of New York Open, but I'm typically I'm usually making maybe 1 to 2 trades a day. And once the expected move that I was kind of looking for heading into the market open, where I make a plan pre-market, once that plays out or doesn't play out, I typically stop for the day. I don't really try and make new plans on the fly. It usually doesn't work out well for me. It's better to, kind of just wait until the next day.
And what's your expected take profit based on the stop loss? What's your reward to risk ratio?
Because I do trade order flow, there are times where I'm scalping. Now I don't use like a static R or a static risk to reward. I usually, I'm basing stop losses and take profits I'm basing it off of structure. Now I usually will never take anything less than a 1R. Now I have trades that, may run for 10R or 6R or 4R. I don't really try and focus on that in terms, I know you should focus on it obviously for profit factor and risk management. I just make sure that when I do enter a trade, it's at least 1R. And my data or the data that I collect from my trading shows that typically my risk to reward or my R that I'm usually going for is around 2, or I think right below that, like a 1.9. There are very rare circumstances that I do take negative risk to reward trades, and those typically come from momentum style trades or momentum style scalps. And those are also positions that I move to break even relatively quickly. I mean, I have trades that maybe last less than a minute or maybe only a couple minutes. And I do have trades that I may sit through for hours or hold through the overnight into New York Open. It really just depends. I do have a couple different playbooks that I use when it comes to, trading futures with the framework and the style that I do when it comes to order flow trading and things like that.
Do you recommend any kind of free tools for futures traders that might be helpful besides using the TanukiTrade market structure map?
In terms of free tools, I don't really know of any free tools that are useful, at least for the way that I trade, because I trade order flow, and just for majority of platforms, a lot of the good ones are the ones that really matter. They're not free, but they're definitely worth it for the ones that I use. At least for my order flow platforms, I have to pay for all those, right? But they're incredibly useful, so I'm more than happy to pay for them. But unfortunately, no, I don't really know of any free tools I could recommend to futures traders.
So can you very briefly show us how you are combining the TanukiTrade levels with your footprint charts?
Yeah, absolutely. So when I'm trading every day, what I use is I use order flow or footprint charts. Now, to many people, this may look a little crazy. Majority of traders or normal, futures traders may not normal, but majority of futures traders may just be looking at typical candlesticks. What I'm looking at is I'm looking at the bid and the ask inside every single candle for whatever time frame I'm on. So, for example, this is a 5-minute time frame. So within this candle, there's two sides. You have the bid and you have the ask. Now, just if you don't know anything about footprint charts, on the right side is the ask. So these are executed orders, and they're showing us what was aggressively executed basically at market in terms of the ask. So that would be buyers. On the left side, it's the bid, or what was executed at market or aggressively. And since it's the bid, it would be sellers. So when we're looking at this chart, or the way that I look at this chart is when we do start approaching these areas or these references of location that I call them, in terms of the put wall, the call wall, the HVL. And when I talk about how I'm looking at this in terms of acceptance versus rejection, or how the auction resolves around this area, what I'm referring to is I'm referring to what's actually happening at the given level between the buyers and the sellers. So when we approach a level, I'm paying attention to aggression versus, or effort versus the result of that effort. So if, for example, we're in a positive gamma environment and my baseline expectation is potentially mean reversion behavior or compression or volatility dampening, if we are watching, buyers aggressively attempt to push up into a call wall, but they're getting no result for that effort, meaning that we're seeing them aggressively lift the offer or push up into the ask, but there's no price progression for that, then we can watch potential absorption or absorption of those buyers happening at an area or a level of interest, which in that case, or that example, would have been the call wall. And when we see that, or when I see that, I'm and then looking for the other party, which would be sellers, to then step in, and then it helps me basically make decisions in my trading. So the way that I trade really revolves around order flow and the footprint charts, and even level 2, which these white levels on the side are resting limit orders or orders that are sitting on the depth of market. And I'm paying attention to what is actually happening at these levels. And are we truly accepting past these areas of interest that I'm looking at, or are we running into them and we're watching something happen here on the tape? Because this is a visual representation of the time and sales. It's just displayed a little bit differently. So this tool goes hand in hand with the way that I trade and the way that I use Gamma and Tanuki's platform, because again, I need to understand what's actually happening once we get to these levels. I mean, if I see acceptance and we're actually having real aggression and we're really pushing through, let's just say, the call wall, then I'm a lot less likely to try and fade that aggression unless I can tell that the aggression is failing or it's causing a failed auction. So yeah, I mean, it's really important that I pay attention to this. This is showing me what's actually happening at these levels. And when we approach these levels, this is where I sit up in my chair, so to speak, and I start really paying attention to what's actually happening in terms of the battle between buyers and sellers.
Mhm.
I hope that makes sense. I know it's
Yeah,
kind
thanks.
of complex for some people.
Yeah, thanks for explaining that. So do I understand it correctly that without these tools, you would not trade futures, TanukiTrade and order flow?
In terms of order flow, I do this is how I trade. So I would not trade without this. Not saying that I couldn't, but I probably would prefer not to because this is what my entire framework and the way that I trade and the way that I've been able to, find some success in trading is by using these tools. And so it's all kind of based around this package, right, of how I trade. Um, but that doesn't mean that you need this necessarily to be successful as a trader. It's just how I personally like to interpret information. And I find it very useful in the way that I trade. So if I have the tools available to me, I'm going to use them. There's no reason not to, in my case, right? When it comes to TanukiTrade, I mean, it's a really important part in how I'm planning out my day, how I'm mapping out levels of interest in terms of the intraday price action. I mean, it's incredibly important. So, at least for my framework. So, yeah, I mean, there's not a day that goes by that I'm not using the platform. I mean, I have it up on my screen literally at all times, and I'm watching these levels refresh and the positioning adjusting, and it influences my decision making in the day. So, it's incredibly useful for the way that I trade.
Thanks. I'm glad to hear that. Now let's talk a little bit about the advice for new TanukiTrade users. Let's say that someone is new to TanukiTrade and wants to use it for futures trading. What would be the simplest beginner workflow you would recommend?
Yeah. So when it comes to just getting started as a futures trader, I mean, when you start getting into Gamma and GEX, a lot of futures traders, some of them may have came from options, but a lot of them have never traded options before. So the idea of Greeks is a totally foreign concept to them. And it is important to at least understand what Gamma is and why this type of behavior or why these platforms such as Tanuki Trades actually exist and what it's showing us. So the first thing that I would recommend any new futures trader to do is wrap your head around Gamma or GEX exposure and how the environment that we're in can potentially change behaviors in the underlying or the futures market that we're currently trading in. Now, it's really easy to open up a platform like this, see levels on a chart, mark them out on your chart, and just try and take trades off of these lines. Of course, we've talked about it. You realistically should not be doing that. Understand that they're references for a location in terms of significant levels, but it's also useful for context, incredibly useful for context for futures trading. And so, what I would just recommend to begin, wrap your head around what Gamma is, how Gamma affects the underlying, and how dealer behavior in certain environments may change. And when you open up this platform in the morning, just take note. Are we in a positive Gamma environment? Are we in a negative Gamma environment? And plan accordingly for your daily outlook for that and use it as context. And as you continue to use the platform and you dive a little bit deeper into understanding the mechanics behind hedging and Gamma, and then even potentially, it turns into a rabbit hole, of course, for futures traders. Well, now, you got to potentially look into Charm and Vanna and things like that. You eventually kind of are able to understand a little bit more. But it is potentially a complex topic for futures traders or something that they're not used to. So it is important to have the understanding or the foundation down first before you just go and try and apply this or this information in your trading framework on a day-to-day basis. So understand and comprehension of what's going on is really important early on. And you have a lot of great content, Jerry, that you make. And I would recommend to any newer user to the platform to actually look at the content you make and the articles you guys write. I mean, when I first started using the platform, that's actually what I did. Is I had an understanding or a baseline understanding of what it is that I'm looking at, but I wanted to dive a little bit deeper into understanding what was going on. And those articles that you wrote actually helped out a lot. So I would recommend that to the newer users for sure.
I'm glad to hear that we have lots of articles, deep dive articles about GEX on Medium as well. Going back to the beginner's advice, what do you think are the biggest mistakes new users should avoid completely?
Well, the biggest mistakes that I see for futures traders, at least when they first start getting into understanding gamma exposure and gamma levels and trying to implement it in their trading, is having these like guarantee style mindsets where, because we're in a positive gamma, they're expecting us to chop and not make any moves, or if we're in a negative gamma environment, they think that compression or balance or chop is just not going to happen this day. And that is just the wrong way to think about it. Or what you would typically see in a lot of beginner traders or newer users in terms of gamma exposure is, again, what we mentioned before, using these lines as just baseline, just blanket support resistance levels all throughout the chart. And I would really recommend to kind of understand what we were talking about earlier in terms of using it for context, using it for understanding the potential environment that we're in, to help plan out the day beforehand, to understand what you're actually participating in, and to understand once we get to these levels to look for confirmation in terms of acceptance or continuation versus rejection, rather than just viewing this tool as kind of a guarantee on certain behaviors. I mean, we operate in a probabilistic environment, so it's really important that you don't think in terms of guarantees. But it's easy to kind of fall into that if you're a little bit newer to understanding some of this stuff.
Yeah, that's why we also emphasize all the time that if you see a put war, it doesn't mean that it's a support in the market. And if you see a call war, it doesn't automatically mean it's a rejection. You have to watch there and pay attention what's going on to happen, and then watch the momentum and then decide on it.
Right.
After this interview, you will see 4 historical trade case studies from Chris. And what do you think they should focus on by watching those recaps? What do you hope a new TanukiTrade user takes away from these case studies that you previously recorded and shared with us?
I think the most important thing to take away from that is not the individual trades or P&L or whatever. It's more so how I'm planning my day. So in the recaps, you'll see me create my daily outlook and talk about kind of what I'm expecting for the day. And I explain why. And I believe that's really important if you're a futures trader to understand the thought process that goes behind that or that comes from that when I'm looking at the platform and planning out my session beforehand, because I always have a plan before I enter a session or I begin trading. It's never just winging it. And I always try and be as prepared as possible. And so you kind of get that look or insight when I'm doing the daily outlooks on how I'm interpreting the information. The second thing that I'd like people to look at when they're watching these is how I'm actually interpreting whether I'm looking at acceptance or rejection at these certain levels. So I'm not, when you see on my chart, we're approaching these levels such as the put wall or the call wall. I'm not just blindly fading these levels. I'm waiting, I'm watching, I'm looking at the tape, I'm looking at what I use in my trading, which is order flow, for confirmation of acceptance versus rejection. And the biggest thing about order flow and the way that I trade is looking at the auction and the tape in terms of effort versus result once we actually get to these areas. So, maybe we're in a positive gamma environment and we're watching absorption happen around a significant level and how I'm interpreting that and then turning it into a trade idea. And that's kind of what I think would be the most important thing for somebody to take away from watching those recaps is how I plan out my day and how I'm interpreting the information once we actually approach these levels of interest, to then make decisions to take trades.
Thank you. Very useful. So before we wrapping up, just a final reminder that Chris is sharing his personal process in the historical examples. His results are not typical. These are individual results. They should not be expected, relied upon, or assumed to be repeatable. Once again, thank you very much, Chris, for this great interview. And if somebody is interested following you, they can find your social links in this YouTube description below.
Absolutely. Thanks for having me, Jerry. I appreciate it.
So thanks, Chris, again. Take care. Bye.
Of course. Bye. All right, so let's take a look at what's happening today for May 6th, 2026. We currently are looking at a very strong bullish move that happened overnight. We pushed up from CME Open about 388 points before finding a high and starting to turn around. Now, in terms of market structure, this is very bullish structure on every time frame that I look at. Now, we did push above the call wall and we are now finding our way back below the call wall currently, and we are opening in a positive gamma environment. So baseline expectation remains compression or rotational behavior unless price finds clean acceptance beyond one of these levels. Now, the game plan of what I'm thinking of today is this area or the call wall sitting right here at about 28,480 is a key decision point for me today. If buyers are able to reclaim above C1, then I will be expecting a further expansion higher into price discovery, and we can take trades accordingly to that. Now, in the event that we do come down here, in this area of discount of this current leg and also where C2 with the stacked levels are currently sitting, this will be the first area where I would be potentially looking at footprint to determine whether or not buyers are going to be stepping in this area if there is an opportunity to take a long for us to continue back up. If we happen to get below C2, I am watching the HVL and P1. Currently, what I'll be looking at, market open, biggest level for today, is going to be C1 at 28,480. So we're going to wait for market open. We're going to see how the auction actually starts to form. We'll see how it goes. So I'm entering long right here. I'm looking for us to accept past the call wall, sitting at 480. As long as we hold above 480, I think that we should be coming back up towards all-time highs or making another attempt higher. So we're going to be giving it a shot. We've been kind of rotating or compressing here, being in positive gamma in between C1 and C2 basically all morning. So we're going to see if we can get that move higher to the upside. All right, we're starting to see a little bit of buying pressure come in. As long as we hold above the call wall, I do believe that we should be okay on this trade. We're approaching C5. I am looking for us to break through this area and continue our way up. We're watching buyers kind of get absorbed in this area, so we do need to be careful. But there's really no sign of aggressive sellers at this point. At this point, since we are getting some absorption happening here, I am going to have to move my stop to break even. So stop's currently at break even. We're going to hold it here. We're going to see if we can get that delayed expansion higher. But we do need to be careful. We're, in positive gamma environment. We're just trying to take it with the trend on a continuation up to all-time high. Alright, at this point we're getting another leg up. I am going to move my stop loss right below the hourly low. So stop is now sitting here. We are kind of in this environment where we're also approaching currently net call volume on the Tanuki platform. So I do have my eyes on here. I don't want this to necessarily come all the way back to break even. We've been in this trade for about 40 minutes. So we're going to trail stop up below the current hourly candle, sitting right here, and we'll see if we can get our continuation up here to all-time high. Alright, at this point. We're having buyers step in. If they are not able to continue this higher, the stop is going to get hit regardless. So we're going to lock in a little bit more profit. Going to be moving the stop loss right below here. So in terms of gamma, we're right around here. I was watching this 580 area, seeing if we can get acceptance above it. If we can get past 580, I do think that we should be okay. But if we're going to, oscillate here, kind of move back towards the call wall, we are in a positive gamma environment, so I do need to trail my stop, or that's how I like to trade in these types of environments. Regardless of what happens or not, from our entry, we have gone about 100 points in profits, pulling back a little bit. We'll just wait to see if it gets the continuation or if it doesn't. All right, so we're having some buying pressure start stepping in right now. We need the continuation of this, otherwise we may be seeing the hourly wick up above and start slamming back down. So I'm looking for acceptance past 580. I don't want us to get back below 580, and right now in terms of gamma, what I'm watching for is there is a level sitting here with the net call volume right around the 600 area or the 605. So because of that, as we continue to push up here, I don't want this slamming back down. I don't want buyers to get trapped or get rejected, so we're going to end up trailing the stop. I'm putting it right below this 5-minute candle, and we're going to see if we can collect the rest of this. If not, we'll get taken out here for a decent sized win. It is a good idea in my case. We've been in this trade for over an hour and 30 minutes. We're getting that slower grind up that I was looking for after breaking call wall. It is pretty important that we just don't give back a lot. I mean, at this point from the entry, we're up about 110 points. So might as well lock in about, 90 points or so. So I ended up getting out of that. Now, we were going for all-time high, but we were able to collect about 89 points from that move, which is good with me. It ended up being about a 1-to-1 based on how much we were risking initially. So the idea was simple. From the outlook, we were watching this 28,480 level. We were kind of bouncing in between during the open. We tried to break out initially. We snapped back. We got kind of pinned in this area and began to have some rotational behavior. Once we started popping up, just due to the rest of how I trade and just going along with the trend, and here we are in price discovery mode, continuously making all-time highs. The moment that we started to see a little bit of buying pressure step in, I was anticipating a little bit, but I did want to go long, see us break the call wall, and have that slower grind up. Now, there is a chance that we retrace a little bit and then continue up to all-time high. That's fine. I just don't want to give back a lot of the profits, and it's on a live account. So in an environment like this, I will begin to trail my stop. I wanted to see us stay above 580 to continue this move higher. We didn't necessarily get that, but it's okay. At the end of the day, we followed the plan. This was the initial plan. Wait for the break of the call wall, look for a slow grind up. We took it, and we were able to capture about 89 points on that move on the live account that I'm trading. The last thing I'll note is that this type of behavior off the open, this wasn't surprising, and this is why I love using Gamma and TanukiTrades as a platform, because it lets me know what type of day I may be walking into. And it kind of played out exactly what I was imagining, in the sense of 480, potential area or decision point, where we could have fallen further, but we did have another positive gamma node at the time that was sitting around here, and we were kind of bouncing back and forth. When we got that pressure moving up, or that break, we were looking for us to see acceptance and then continue higher, and that is what we got. So this may continue up at this point, but I'm just going to call it a day, and I will catch you guys next time I trade. Peace.
All right, so let's do an outlook for NASDAQ May 12th, 2026. Excuse my voice, I am just a bit sick today. We finally got a little bit of a pullback last night overnight during Asia and London, so we're opening up currently in a negative gamma territory. So the last few sessions, we were in cleaner positive gamma environments or compression style environments that we saw basically like yesterday. Today's a little bit different. So we are expecting in a scenario like this, or at least I'm expecting in an environment like this, I am expecting a little bit more volatility or cleaner directional expansion, either direction. And the key levels that I'm really going to be looking at today is I'm looking at the HVL line, which is right around 29,370. I'm looking at the call wall, and realistically I'm looking at P2 and P1. Now in the event that we begin to push up and we hold above 29,370 and buyers reclaim this level, then I will be expecting us to make our way towards C1. And potentially if we break C1, it could open up a delayed expansion even higher. Now in terms for the downside, if we begin to make another push lower off the open, as long as we stay below the HVL, I will be looking for us to potentially rotate lower and create a deeper pullback. And I'll be keeping my eyes on P2 and P1 just because these are pretty important levels. They're pretty large, but especially P1 because we have net put open interest, and net put volume all sitting here stacked at 28,875. It's going to be a pretty important level for me to watch this morning if we do make our way down there. All right, we're currently watching this area to see if buyers are going to begin to step in here. If they do, then we are going to be looking for a potential long position. We have sellers coming in right now. They're starting to slow down a little bit. We see the aggression, but the pressure or the price progression is not there. We just took data lows. All right, we're getting some of that aggression here. I'm entering in longs. As long as we stay above the POC, we should be okay. I'm going to enter in on my live account as well right here. All right, now we're seeing some buying aggression. We need to see some acceptance to continue to push this. So now the stop is going to go right below the big trade, and we're going to try and hold this to see if it can make a run. We do need to be careful as we approach these large sell orders. We need to actually push through them with some aggression, so I'll end up trailing my stop as we approach up here. I'm going to trail my stop right below this 5-minute candle because I don't want this, I don't want us to reject the large sell orders when we first came in up here. And I'll just take the profit. All right, so we ended up getting out of that up here. If we get a nice retest off of this level, I might enter back in. All right, we're coming back into this area. Let's see how price reacts here. I'm looking for sellers to stall, buyers to defend. We can have a pretty tight stop loss, so I'm going to go long. Stop's going to be right below the big trade. And if we can get above this, I'm going to add into this position. We're getting that aggression going now. This is good. We want to see us get past this area. I'm actually going to trail stop right below the open of this 5-minute candle. If we're going to have a strong push, it really shouldn't get past the open of this 5-minute candle. We should just continue. All right, so we got taken out of that. The most key area right now is this put wall at 29.80 because if we begin to accept lower, then there's a pretty good chance that we actually continue down to even P2. And if that's the case and we start seeing acceptance below put wall, then we'll be looking for a continuation lower. All right, we're around the put wall right now. We're going to be watching to see if we're going to accept lower or if we're going to pop back up. In the event that we actually accept lower prices and selling pressure sustains, then we're going to be looking for us to make our way down towards P2. Now, what we're currently looking at, as we begin to get below the put wall, where the old put wall was, now we have a new put wall down here that also has NPOI and POI. This could eventually be a draw for the day, so we got to pay attention to that. I just got to make sure that we're not about to chop or get pinned around the previous put wall right now. So we're approaching back here to the 29.80 area. If we hold below this, we see buyers getting absorbed. I might try and take a short. I'm actually going to take it right here with a stop just above. Trailing the stop here. We need to see a lot of aggression start pushing lower and a fast breakdown in this negative gamma environment. We keep having sellers get absorbed right here. They need to break through it. So I'm adding in a moving stop right here. We need to continue. I don't want to see us fail again. Now, just in case you're wondering, I'm adding into these winning positions because I'm seeing if we're going to have speed. What I like to do in negative gamma environments is I like to add to winners, which sometimes may cause me to hit break even or like hit these smaller trailing stops. But in the event that we do expand and we expand fast, then it results in a pretty large winner that is much larger than all of my losers. So that's why you may see me doing this over and over and over. You know, right now we're kind of in this area and we're not getting that speed that I'm looking for, but it's okay because I try it out anyways. Because in the event that it does move, well, then it results in a pretty large winner. So right now we held below this area. We tried to take a short up here. We're watching us continue down here. I'm trying to add into these plays to try and get a bigger win. I'm expecting us to make our way down here towards the put wall. So we're still pushing lower. I do believe we're still coming down here towards 28,875, the new put wall with put open interest and net put open interest. We're seeing if we can get an entry on the continuation, but if there is none and we just make our way down there, then, you know, we'll just call it a day. I'm going to enter into a short here. We're going to be looking for us to continue down towards P2. And right now we're looking for us to continue down here towards first 28,915, then 28,875. So at this point, I am going to move my stop here. And the reason why we're taking this trade is because we're below the original put wall. I'm expecting us to continue our way down here to the new put wall, which is sitting down there at 28,875. There is a level right here in terms of gamma that we do need to pay attention to, this one, and that is exactly why I'm trailing my stop. We were aiming for the put wall sitting down here. It may still go there, but we're watching currently this other level, P2. So P2, the moment we started approaching this level, I have to trail my stop. I would rather trail my stop. We may continue down, but, you know, I'm trailing my stop a little bit here today. We haven't hit a full TP, but we have extracted money out of the market today, and that's kind of just what the goal is at the end of the day. Any type of responsive buying activity that happened here, we were looking for opportunities to go long. Now, we did have to trail stop because this is very bearish price action. We're trying to catch a reversal. So I need to be very careful. And when we're entering into areas like how we were right here and how we were right here, where sellers are stepping in, they're likely to try and defend. We have to be careful in those scenarios. Now, once we started accepting below the original put wall and then the put wall then changed to 28,875, this became the draw of the day. So any type of long positions, once we were below here, we're kind of off the table. We were just looking for a continuation lower. So I entered long right here. I'm looking for us for buyers to reclaim the put wall. So when this new 5-minute candle opens, I do not want to see it get below 875. Trailing stop is going here at 66. We're 50 points in profit right now. I want to see if we can get that additional push though. Buyers are struggling a little bit here to push higher. We need to see them really do it or we're going to get taken out. Stop's right below put wall. I need put wall to hold, otherwise I don't want to be in this trade anymore. I'll take my 40 points, call it a day. Alright, so we got taken out of this trade for about 40 points or so. I wanted to see us hold above the put wall. Unfortunately, we didn't actually hold above the put wall. This was about a 2-hour trade. We're in a very strong downtrend right now, so if we're going to be trying to take reversals, like I said earlier, we got to be pretty careful and, you know, trail our stop pretty tight. We need a lot of aggression in terms of buying activity for us to really begin to push back up. So if we're not seeing that, then it's the best thing to do for me is to trail my stop and continuously, you know, have these trailing stops hit 25 points in profit, 40 points in profit, because they eventually add up. All right, so what I think I'm going to do is we were able to catch, you know, even though we never hit a full TP, we were able to catch a decent amount of profits today. We were trading a small live account. So that small live account started at about $440 balance. We're now up to about $677. So we made about $269 trading really 1 micro. Sometimes it was 2 micros, but it hit us out at break even pretty quickly. So we were able to catch, you know, about 500 ticks to maybe, just to be fair, because there were some trades that were 2 micros, 300 to 500 ticks today. The move really was, you know, once we began to accept below the original put wall that we would make our way down here, I kind of got taken out of it, trailing my stop, but it's okay. You know, we didn't have the best execution today. I was working with a small account, so I'm trying to not leave a lot of profits on the table. So in the end, we are up and we're green on the day. And then I will catch you guys next time. Peace. All right, so let's do a daily outlook for May 18th, 2026 on NASDAQ. So we came into discount overnight of the higher time frame range. We were able to hold discount and stay above the 29,000 area or find a little bit of support here and be able to push our way up. Now where we are currently at in terms of gammas, we're sitting right around the transitional area, so right below HVL. Higher time frame in general is still bullish, and we are watching us find a bit of support here heading into New York Open. Now, the most key decision area for me today is going to be the HVL. Now, the HVL is sitting at 29,270. Early on in the session, this is the most important level. If the buyers can push above and hold and break above the HVL and start entering our positive gamut territory, then the first real upside target becomes the call wall as well as Friday's New York session highs. In the event that we even break the call wall, then I will be expecting us to potentially have a delayed or slower grind up towards where the net call open interest, and absolute open interest is actually sitting. But for now, our eyes are set on the HVL. In the event that we do get above the HVL, I will be looking for a continuation higher towards Friday's New York session highs as well as where the call wall is currently sitting. If buyers fail to get above the HVL and fail to reclaim this level and we begin to rotate lower, then it is likely that we continue a downside rotation towards potentially P2 or even the put wall sitting here at 28,860. The game plan for this morning is actually pretty simple. We're really just going to be watching how the auction resolves around the HVL this morning. And we're going to be looking to see whether we're going to continue back up and continue the higher time frame trend being bullish, heading our way back towards call wall, or if we're going to rotate for a further drop lower down in this negative gamma territory. It's a very clean decision day today. We're going to be watching HVL. We're going to see how the auction actually plays out, and we'll see how it goes. Right now, we're retesting the HVL. I think we're seeing buyers try and reclaim the HVL, but they're failing. I'm going to go short right here. We're seeing a large trade come in. We have to hold this. We're approaching the put wall right now. This is the current put wall sitting right here. So we're looking at put wall being right here. It's bouncing back and forth, but there's a very large negative gamma node right here. So if we can push down past this big trade, I'm going to be trailing my stop right below it. So now we're currently approaching the put wall. If we can begin to push lower through these orders, just like that, I am going to have to trail my stop. Stop's going to be going right above the POC of this candle. We're looking for it to continue down. So if we could break through this and break lower right now, I am going to be adding in and trailing a stop. I don't want us to pop back up. I'm trailing my stop right above these large sellers. As long as we hold below this, we should. There we go. Very large seller. We need us to continue though. We can't have us reject these orders like this. Alright, so we hit trailing stop. We couldn't get past this area. We had a lot of selling pressure step in. So right now I'm currently watching this area right here. This is where the put wall used to be today before it ended up moving back down here again. There's a lot of negative gamma here as well as some volume. So we're going to be watching to see if sellers want to defend their position. If we begin to see buyers start getting absorbed and we begin to rotate over, I am going to go short again. I'm going to go short right here. Stop loss is going to be right above these highs. And we got to be careful about this area. We're having sellers come in. We had buyers fail to push back up. We just need follow through from the sellers. If this order gets rejected, it is a pretty good sign for us to start moving lower. I'm going to have to trail stop a little bit. We had a massive amount of buyers step in here. They tried to step in here again. They failed, which is a good sign for this trade, but I do have to understand that they are present in this area, so we're going to trail stop. We're trailing stop as we're moving down. There is a chance we bounce back up hard here, so I'm moving the stop as we go. This is the most important area that we need to break right now, that sellers need to really push through hard.
I'm going to trail stop even tighter. All right. We ended up getting out of that for 50 points. I don't want to see us bounce out of this area. We had buyer step in here once. We may continue down further, but I don't want to risk it right now. Volatility is very large. We can easily just start snapping back and forth in this area. Now it may still work out and we may make our way all the way down here to P1, but this area right here is order flow wise. We had buyers step in here, sellers got absorbed in this area, so if it happened once, it could potentially happen again. So I need a trail stop pretty tightly, and I'm happy we did because we could see this moving back up relatively quickly. So at this point, we took 2 trades. It's 2 wins. We're going to wait a moment, and we're going to see if there's anything else we can take. So the first trade was for about 50 points, I believe. The second trade was also for 50 points. So it puts us up about 100 points on the day. We're trading a live account, so we're using smaller size. But this is great volatility. There's a lot of opportunity here, and we are in negative gamma territory, so there could potentially be more moves. I mean, we're seeing good volume right now, even this late in the day, which is pretty interesting. So I am still watching this area, though. If we see buyers attempt to push up here again, we may, and they fail, we may be forming a range, which this is a large enough range that we can actually play this. It's over 100 points. So if we get a slight overextension and buyer failure, then we can try and take another short. All right, so what we're looking for is about 130. We're looking for us to come up to about 130 right now. All right, so if we begin to see buyers get absorbed, we're going to go short. All right, I'm going to go short right here. A little bit of a late entry, but we popped into 130 and we started seeing that rejection. So we're going to see if we can actually take it lower. And we're going to be targeting P1. See if we can make our push down to P1. Alright, we're 25 points in profit, stops going to break even. As we begin to push lower back towards the bottom of this range, we are going to have to trail stop even tighter. We'll see if we can get the push here. Alright, it came back up. There's a chance we continue, but we are compressing, so I do have to be kind of careful. We went about 25 points in profit and then it snapped back. So we may call it a day there. We had us come into that 130 area we were watching for. We tried to see if we would have that push lower. We couldn't have the follow through from the sellers. We're beginning to compress a little bit right here. I don't want to see us get pinned down here and begin to chop essentially. The ATR is incredibly large. On a 5-minute, we have an 81 point ATR, which for trading my live account, it's slightly dangerous to actually trade when the ATR is that large. I have to use really small size. So I think what we're going to do is I'm going to just call it here. This idea may still work out, but it's all right. We took a short up here. We got out for about 50 points. We were trying to target P1. We took another short right here. We got out for another 50 points. We were trying to target P1. And then we were trying to go short again right here. We got hit out at break even. There is a chance that we still drop down to P1, but we're green on the day on the live account. Don't really want to mess it up at this point. We're compressing. It's better if I just kind of call it a day and come back tomorrow. But just to recap, the idea today was very simple. We hold above HVL, then we're looking for us to make our way up here to the call wall. We held below HVL, then we were looking for us to make our way towards the put wall down here. When we came below HVL, we attempted to push back up and buyers failed. So when we started rotating back over and sellers started to step in, that's where we go short. We tried to target P1. We were getting some good momentum, and then P1 then switched to this level, which we began to kind of find a little bit of support here. So when it popped back up, it hit us out at our trailing stop. When we came up into HVL again, we saw the exact same thing happen, but I didn't want to take this trade because there was a potential that we could have just done this, right? So I wanted to wait for us to break where the put wall was temporarily. And once we actually did that, we pushed down, we try and push back up, buyers failed, we pushed down again, and this is where I went short. So we tried it again right here. It may still work out, but we're compressing. It's better to call it a day. So I'll catch you guys next time I trade. We caught about 100 points today. Peace. Let's do an outlook for June 1st, 2026. So pre-market, we are about roughly 45 minutes before the open. We are currently sitting in positive gamma in terms of environment. Now, what I'm really looking at today is I'm paying attention to the fact that we did put in highs in terms of all-time highs from the overnight session, and we did have London begin to push lower. So now we are still above the HVL and we're in positive gamma territory. We do have this call wall that's currently sitting at 30,545. Now, this is actually a key decision area for me today. In the event that we get up into this area, I'm going to be watching for acceptance or rejection. Now, if we get above 30,545 and we have acceptance above this level and we do see buyers hold above the current call wall, then at that point I actually will be expecting us to continue up higher towards at least all-time high, which is sitting here at 30,595. Now, in the event that we push up off the open, we can't really get past 545 and we begin to rotate lower, I will be watching for us to potentially come down and make our way towards the HVL, which is sitting around 30,380. Now, this is a major level for me today as well, because in the event that we are unable to hold above the HVL, then we may actually begin to rotate lower down towards the put wall. So we're currently we're holding below the HVL. We might get a continuation down towards the put wall here. I'm waiting for this 15-minute candle to open up. So we're going to be watching for us to come back towards the HVL here. If we get a rejection, we may be rotating lower towards the put wall, which I'll be looking to take a short. I'm going to throw on, buyers are struggling here. I'm going to throw on 5 micros for the shorts. The stop loss is going to be above the HVL, and we're going to be looking for a continuation down towards P1. In the event that we do get a little closer towards the HVL, I will be actually looking to add into this position. All right, I'm going to add, now that we're touching into the HVL, I'm going to add into this position. All right, stop is going to break even at this point. I just wanted to see us accept below HVL, so if we can hold below here, there is a pretty good chance we actually continue that rotation lower, so we'll see if we get it. Although, you know, if we do get closer to market open, I'm probably just going to get out. I would rather not hold this through market open without trailing stop into profit. Alright, I'm dropping stop here, but I'm getting ready to drop it down here if we make one more push lower. I'm trying to see us push lower before we open so we don't just like snap up. Oh, did it take me out of it? Okay, so we got out of that. We went like 60 points in profit. I don't feel comfortable, like, especially being in discount of the active range. I don't feel comfortable holding a short through market open. I have a feeling we might like go all the way back up to where my break even was at. So we're currently accepting higher prices. I am looking for us to take out these highs sitting here and potentially continue our way up towards the call wall. So I'm actually going to be looking to go long if we get a little bit of a deeper retracement here on this candle. I'm looking for us to kind of tap back into where C2 is sitting. Looking for sellers to fail when they push lower right now. Alright, sellers are struggling. I'm going long right here. So because we're in a positive gamma environment, we're looking for us potentially to take out these highs, but I am going to have to trail pretty aggressively. We're looking for these buyers to start stepping in. At this point, we need to start trailing the stop. We just took the highs. And we're pushing right up into the call wall. Almost got filled. Trailing stop even more. Stop sitting right here. We're currently in the position. Alright. So we ended up getting out of that. We got out a little early. Caught about 45 points on that trade. That'll be it for the day for me. I sat here and waited for that for a pretty long time. On our other account, once we did have that news come out, we were watching that HVL level. As we begin to actually push down, we closed below it. I wanted to see us actually have acceptance below the HVL, so when we began to push back up into it, I went short and tried to hold to the put wall. As we approached market open, I did need to move my stop into profit just because it's market open. We ended up getting out of that. We sat through this whole chop, and then finally, as we began to kind of get above the area that we pushed at the open, when we started seeing that acceptance, I said I was looking for sellers to push back towards C2 and then for them to fail and buyers to step in. And once we saw that, we went long, targeting these highs for us to run through them, and then eventually coming up to C1, which is kind of where we're stalling right now. It would have potentially hit our full TP, but again, due to the environment, it is kind of a better idea for me to actually trail the stop when we're approaching the call wall, when the volume has been low, majority of this move higher. I just didn't want to see us snap up and then snap down. So that's going to be it for me today. I'll catch you guys next time I trade. Peace.
Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.